And we are live. Hi, this is Dennis Wilburn with the Active Trend Traders. Joining me today is David Grandy from All About Trends. David, how are you today? David, how are you today?
I'm doing great.
Okay. I hope hope we don't have any technical difficulties. Guys, I've got to break it off right at 11 or maybe slightly before. I've got to get to a luncheon and a conference this afternoon. So, David, let's get to work.
Sounds great.
So I want to remind everybody that anytime David and I talk about stocks, it is for basically trading purposes only. We do people do parallel trade with us, but that whenever you're looking at any type of new trading method, always paper trade first before risking your own personal capital. Dave and I'll put this up every week. You know, we like to talk about stocks. We can basically, by webinar, talk to any group anywhere in the world. And we have a couple of presentations. One is the art of trend trading, which we get into, you know, a little bit more of the nuts and bolts about how we do our trend trading. And secondly, I just put together and have been presenting this to a lot of IBD meetup groups. This is the truth about breakouts and alternative entries. And it has been very, very well received, and it gives you a person plenty to talk about, you know, think about in reconsidering maybe some of the biases of their belief about what it takes to trade. Anyway, if you would be interested in, you know, us either coming to your group or doing a webinar for your group, just give me an email or send me an email down here at dww@activetrendtrading.com. So, David, amazed? I'm not amazed, but I'm sitting there going, wow, this market just continues to slug higher. Index continued their upward move this past week. S&P doing a little bit of a consolidation over the last couple of days, and so digesting gains, or are we setting up for a pullback? I know that you guys and I would definitely like to see a little bit of a pullback, so that would open up some buying opportunities. And so that's you know where I'm at with that. The NASDAQ, which is basically between the NASDAQ and the Russell, they've kind of been the two leading indexes so far during this last upsurge. Gradual push higher, and at the same time digesting some of its gains as it makes its progress up. And the same thing I'll say about the Russell. Outside influences for the upcoming week. Major earnings are basically complete, so there probably will not be any huge market movers coming out of earnings over the next couple of weeks. It's been pretty quiet, although Janet Yellen did come out and make some announcements during the week about leaving interest rates in place for longer than she had expected. But remember, you know, we're one news story away from a reaction, which would not, in this case, be a bad thing. We need just a little bit, I wouldn't say necessarily a pullback, but certainly a move sideways, digest gains before we potentially take another step up. So that kind of covers what's going on that I'm seeing in the market this week. One of the things that I share with just about everybody is this percentage of stocks over the 20-day moving average, and why is it important? One, it tells us how many stocks are actually participating in this upswing. And ever since November this past year, we've had, as the market has pushed up and made new highs, you should be noticing one thing. This particular indicator has not been doing that. Well, what does that tell us? It tells us with each surge up in the market, and these were all great tradable rallies, fewer stocks in those indices, and this is the NYSE index, fewer stocks are actually getting above their 20-day moving average, and so fewer stocks are participating in the strength of this last move up. The weighted index, like the NASDAQ and the NASDAQ and the S&P, which have a big chunk percentage of Apple, That's one thing. A lot of this up move has been due to Apple's continuing push higher and higher and higher. And so the essence of what this tells us also is that with fewer stocks participating, one of two things can happen. At some point, they will reach a level where institutions will come back into those stocks and push them up, and that could give us, like a turbocharge to the current uptrend, or the institutions can come in and start selling those particular stocks that aren't participating off, which then would add to the potential and the weight that would be on the market that potentially could pull it back down. A lot of talking heads have been talking about, well, we need that 20 to 25% correction so that we can go into the next super cycle. And from what I'm seeing on the charts, I'm just not seeing it happening yet. So let's go to the charts real quick, and then we'll get David, you got some good things to discuss today, right?
Yes, I do.
Okay, let's take a look at SPX. There we go. So the S&P, if we go over to the daily chart, what we're looking at is we're just making a little flag that's pulling back to the 8-day moving average. It has found support. It's got a support level at 2103, and then resistance up here at 2119, 2020, or 2120, if you will. If we close today where we are, we've got basically a spinning top doji. One of the areas of that we're keeping an eye on is on this true strength indicator that kind of measures some of the internals also of the individual indices and stocks, and the momentum. As you can see, as we pushed up to make new highs, momentum and true strength have not been behind this push higher. Now, it doesn't mean we can't continue to push higher. It just means that the drag that's going to come onto the market will potentially either slow it down, or we may get some kind of an exhaustion gap up and then a rollover. But at this point, the market is just moving up, and it is in a uptrend. It is in this channel that's been going on now for over almost 2 years. And that continues to push higher. What about the NASDAQ? NASDAQ, as I said, was one of the stronger indices. And today we get a little bit of a pause here. The NASDAQ has been working over the last week, has been in this little sideways move between 44.31 up to its high from yesterday, about 44.61. If we close today where the current price levels are, we would have a bearish harami in place. Again, not a lot to get excited about because we've just made a new high. We have no indication to say, okay, let's go short the market. However, this may be a setup for basically a predicting that we are setting up a pullback at least, either to the 8 or the 20 when the 20 gets up here, because right now we are way extended from the 20, and that's when you're looking at reversion to the mean. The 20-day moving average is typically the average that we are looking at to tell us how far extended we are, and the measurement for the reversion to the mean, the Russell. Okay, Russell, as you can see, if we finish where we are today, we will have a doji harami, bearish harami, on the daily chart. The weekly charts have pushed higher up to new highs. 1240 is a resistance area, and a little bit more strength which is really nice. A little bit more strength in the Russell than was evident in the NASDAQ or the S&P. However, the momentum, as we talked about on the other indices, is showing that it is it has negative divergency on the weekly momentum, and it is just pushing back to the highs that it reached over here on the TSI, just above them. And so TSI is showing is showing that Russell is in pretty good shape, but the momentum is something I'm keeping an eye on. We can see that divergence of momentum starting to work out over here on the daily chart also, where we're pushing to new high. However, the indicator is not. And I'll caveat those comments in that even though the indicator is not pushing to a new high, it doesn't mean that the price action won't push to a new high, because oftentimes the market here lately, David, has been reminding me of the way it was back like in 2003, 2005 time frame, where the market just got on it got onto a uptrend, and it would hardly come back to the 8-day moving average. I mean, everybody kept waiting. It's going to pull back. It's going to pull back. It never did. It reminds me a little bit of that, and you can see that ever since we broke out down here earlier in February, that this 8-day moving average has been almost like the trend line for the Russell and the other indexes. So that's what I've got for the indexes, Dave. I'm ready to switch over to you and let you get going with your stuff.
Okay, thanks a lot, Dennis. I mean, it's just been a great market. I mean, if you are into buying leading stocks, whether you buy breakouts or you buy pullbacks, I mean, it's been a fantastic February after a dreadful January with all that volatility. So not much to complain about here. Leading stocks are exploding higher pretty much all over the place, and the market's acting really well, and we're also seeing some great structure for the patterns that we look for. And so what are those patterns? We don't, so this is kind of a tricky market because, like Dennis said, it's very extended, definitely due for a pullback. We've been saying that for a little while now. So we're not going to go out and go hog wild buying a bunch of stocks here, but we are going to go out and buy stocks that are coming to us via pullbacks to support, and we buy them at support and we sell them at resistance, and we do the opposite when we're shorting, and we're just doing what the chart tells us to do. So here is Error Methods. We featured this in our newsletter yesterday. We took a trade on this. As you can see, it's in the process of changing its trend from down to up, and when you have a stock that's been in a prolonged downtrend for a while, the temptation is to jump on it here when it first takes over the 50-day, but for us, we need to see that happen, and then also the pullback, the initial pullback, to digest this gain, because stocks typically will make big gains right away when they're starting to change their trend. But as you can see, it went from 42 to 48, so the last thing we want to do is buy it after it's already made a 20% move or so. We want to wait for that pullback and make sure that it finds support where it's supposed to find support, and it's indeed done going down. And then this is what it did today. I mean, it had an earnings announcement, so that definitely aided the gain here. But you can see the patterns work. And this was a nice $1,100, almost $1,200 gain that our subscribers locked in this morning. And so if you like this pattern, this oil is the place to be next week. I mean, there are a ton of energy stocks that are setting up this exact pattern here. They haven't exploded higher like Error Method did yet, but they have this pattern right here. And we just did a nice article in our newsletter today about oil and what's happening with the price of oil, and then different stocks that we can take advantage of that are in the process of changing their trends from down to up. So if you want to see that, this is really the time to get on board with us with the 15-day free trial we have if you're not already a subscriber. So, and I'll talk about that later. So the other thing I want to talk about is, what does $500 a week do for you? I mean, it's tempting to go out, particularly in this market where it seems to be up every day and stocks are exploding, to just try to swing for the fences and hit a grand slam. But if you, as January showed us with the volatile market, taking small gains and doing that consistently over and over again is really the way to do it. Just $500 a week. You know, we made $1,200 on the Air Methods trade, so that we got, you know, more than 2 weeks worth of gains right there. But just $500 a week is a pretty healthy return. And I, you know, listed them out here with various account sizes. I mean, I don't know. I mean, I'd be happy with those returns. I think most people would too. So, and that's really our focus, is to show you the patterns, put you in trades that are in leading stocks that are showing those patterns, and locking in our gains and moving on and wash, rinse, repeat, doing it all over and over again. This is how we've done so far in February. We have some really nice gains. We have some losses too, so you know that's the key too, is when you have losses, keeping them small. And as you can see, total profit's $2,600 for the month, you know, well over the $500 a week threshold. So you know, we just keep doing that month in, month out. You know, we're gonna be going places. So as I mentioned, oil is setting up really, really nicely, and this is really the best time. I mean, I do a lot of radio shows and speaking engagements and stuff, and everybody asks me, you know, what's going on with oil? When do I get in? When do I get in? Well, you know, a few weeks ago it was a little too early, but now it's starting to look like this might be the time. So if you want to see what we're doing with that, like I said, we have a 15-day free trial. If you're not already a subscriber, go to our website, sign up for this trial. There's no credit card or anything. Just give us the email you want newsletter sent to. You'll get our article on oil and all the current trades that we have, the current watch list. We could be doing these oil trades later today or Monday, but maybe even later today. So they're very actionable. The time to take advantage of this is right now. So that's about it, Dennis.
Hey, thanks, Dave. Appreciate that. Absolutely, you guys had a great month, and that's absolutely phenomenal. The you know, a lot of people ask, well, you know, when they try to compare our two systems, oftentimes they look at, well, let's see, and you know, which is doing better. But if those who've been with us for a long time, you know, there are months when there were months last year, Dave, when I'd have the big month, and yours would, and vice versa. And so that's one of the essence that makes both systems really beautiful. If you're a joint subscriber, is a lot of times what happened, at least last year, is that you know, when either one of us had an off month, the other one didn't, and so it was absolutely phenomenal. Don't you think, Dave?
Yeah, absolutely.
And so, hey, I want to remind everybody at the active trend trading system, you know, basically our motto is both clarify, simplify, and multiply. This week has been, this month, a lot of the first part of this year has been kind of small ball for us, and but basically at the active trend traders, we tell people, you know, we show people what to trade, when to enter, when to exit, what strategy to use, and what to expect. This past week, what was so funny, we had a pre-earnings, I love pre-earnings trade, picking up somewhere between 5, 10, 15% prior to actual earnings happening. And all the way up until yesterday, Noah was telling us that they were going to report earnings yesterday after hours. However, when we popped on the chart yesterday, Noah, and this is one of the Chinese stocks, they changed their mind and they said, well, we're not going to do it today, we're going to do it. But I went ahead and basically we entered the trade down here at 20.56, and then we basically exited a couple of places. One for a 7% gain at half of our position on 218, and then yesterday, since earnings had become an uncertainty, we went ahead and we locked in and just said, you know, what the heck, let's just jump out of this, because and so in total, because I always like to take a little bit of profit off the table, is we're moving up at a logical place, and $22 was a logical place, so 9.5 after a 2 weeks. So on every setups, what we at the Active Trend Traders do, we basically send out a text alert that basically says, you know, here's what we plan on doing if you want to parallel trade with us, and what strategy we're going to trade, and where we're going to exit, profit target, stop losses, and then follow that up with an email through Aweber. And And then one of our members has been taking our system and applying a option strategy to it. And he took this same trade and he basically took 60% profit off the table. And we had been wanting to add a simple option strategy to what we're doing, where we basically say, hey, here's the option I'm trading, and here's our limitations. We covered that on our Wednesday night training this past week. And so we covered on our Wednesday night training, and getting a lot of positive feedback on that. And we're waiting for our first option setup, because what had happened, David, on a $10,000 account, Andy in Texas, it was basically, he was trading options on it, and he had a very limited number of options. And on a $10,000 account, he had a 36% return within the first 2 months of the year. So here's all the trades we've done for the year so far, and basically divided between the income generating and the capital growth side. And we post all of our trades. This does not include trades that are open, but we include and post all of our open and closed trades to the website, typically over the weekend. For our premium members, each week also send out a select IBD quality stocks that are highlighted in our traders report. Here's how we're doing so far to date. Margin account up a little bit over 1.6%. And on the IRA account, it's up 6.8%. The difference being primarily is because I was testing out Andy's some of his strategies, and so as you can see, it made it. We started with the same amount, 100,000 in each account, and so that's one of the other reasons why we said, we got to implement this. It's easy to apply and it's easy to follow. So clear and simple, and those trainings are on the website. So with that, so for the active trend trading, we train every Wednesday night. This week we'll be training on how to use indicators, and we've, again, as I said, have added the monthly and weekly option strategies that will be going to people who want to be trading options. So right now we do have a trial membership. You can go here and check it out either at that website, or if you're interested in just going for the complete active trend trading system, you can jump in down at the monthly membership introduction. So Dave, that's basically all I have for today. And you got anything else?
I'm ready to look at stocks.
Okay, I do have a couple of stocks that we're going to mention here shortly. So the one thing, I made a boo-boo last week. I'm not going to make the same boo-boo this week, is I stopped the recording just before we started to review stocks. However, as I had left home and I was driving around, David, I said, the guys really need and really want, like the stock review part. And so I went back and I went through the transcripts of the what everybody was asking for, and I did the stock review and then posted that later, and folks seemed to really like that. And so I made, in the future, I'll keep the recording going, so it'll all be attached and all that kind of stuff. But what I think I will do is also just go back and do a secondary analysis and repost a video on that after the fact, and just to give me a little bit more time to look at the individual stocks. So with that, folks, we are done. Any questions? And are you ready to look at stocks? And I'm not getting... So any stocks to look at today, folks? Folks? Can you hear me? Dave, can you hear me?
I can hear you just fine.
Okay, there we go. LVLT, Dave, do you have that?
Sure.
Okay. BRNT.
Was it BRNT?
V is in victory. VRNT. And Dorothy would like to tell her about a couple of your and one of the energy stocks you're looking at.
Okay.
But don't give away the farm. No, I'm just kidding. So, okay. And then I'll cover BDSI. So for the folks who were on last week, how did getting the the recording of the individual stock review, did that work for everybody? There you go, David. Okay, cool. Yeah, give me a little bit more time to just focus on. Okay, I sure will, Trace. So, David, are you ready? Are you ready? Okay, let me get my screen up. Go to a chart. Screen to David. Where are you? Okay, you're live, man.
Okay, so VRNT looks a lot like kind of like Facebook's chart, where it's kind of made a little double bottom here, and it's trying to poke through resistance at the very top level. So, you know, very short-term overbought. It's gone from 53 to 61 in, you know, a few weeks' time, 56 to 61. I mean, it doesn't have a whole lot of scale, so, I mean, you could probably take it here and probably be all right because it just doesn't have a whole lot of scale. But I mean, for us, I'd like to see it digest some of the short-term gains here to set that up. Let's see, LVLT trading. You know, nice gap up. I'm assuming that, or not gap up, but nice move up here. I'm assuming that was earnings related, and it's been trading sideways since. Kind of reminds me of data, which gapped up and is trading sideways. So, you know, just have to let it digest its gains. It's common for stocks to do that after making nice big short-term moves, as long as the digestion of gains is, you know, very tight and orderly, and volume's not excessive. That you know, looks very constructive. And what was the other one? In one of the energy stocks.
Yeah.
HCLP is a fracking company, sand company, and you can see it looks a lot like the Air-Methods chart. Been in a downtrend for some time. Came up here, went above the 50-day, and this is why we don't jump on it right away, because it went right back down below it, but then retook it again, and now it's pulled back. It's got some support level, so nice support here at the $35 level where it's bouncing higher from it today. So this is definitely one of the many that are on our list. Notice how, too, the 50-day moving average is turning upward. So we'd like to see that as well.
Yeah. So. You know, some of the other, some of the MLPs for both gas line, or, you know, pipelines, and also the MLPs for like GLOG. I'll show you a chart of that here shortly. Is they just reported earnings today, did really well. And it's been a real flaky stock, but so it's a quick gainer type stock, and you jump out and jump in. Dave, do you have VEEV, and SAVE? And if you,
all right, so VEEV is trying to establish a new uptrend here after kind of waffling around for a while. So, you know, it's encouraging to see it making a series of higher lows here and higher highs. But, you know, it's 50 days kind of just going sideways. So for me, it's kind of non-committal right now. I don't know what to do with it yet. I'd like to see it, I don't know, give me more, show me more that it's ready to go on an uptrend. Right now, it looks like it's just kind of going sideways here, and could easily come back down and retest this 50-day.
Yeah. So,
yeah. 50-day.
And save.
Oh, save.
SAV. Yeah, Spirit.
Yeah.
Oh, that's looking pretty good.
this is looking nice. This is exactly what we look for. Stock that's in an uptrend, come up here, and then now it's pulling back to digest its gains. So just a little bit more chart time, as we like to say it, and this one looks pretty good.
Cool. Okay.
It has made a big run though, so you've got to be a little bit cautious of that. I wouldn't go hog wild with the position size, given that it's already run so far for so long.
Yeah.
So maybe if you need to be in the airline space, maybe you wait for Virgin Airways to wake up a little bit.
Yeah. And I'm gonna cover Alaska Air here shortly.
Okay.
It's looking kind of good. So I'm gonna pop over to. Why don't you get data ready, and I'll cover a couple, and then we'll come back to data for you.
Okay.
And then also AMBA, AMBA. We can both kind of cover AMBA. Here's the first one that somebody asked about is BDSI, Vasco Data Security. It's doing a real nice setup. It's pulled back to this breakout area about the $25 range. We had an order in it. We were trying to catch it. It was coming down here. It finally has had 1-2 days of support off this $25, $25.17 level. We got into this position yesterday at about $26.10. And as we can see, you're getting a lot of indecision here, but with the anticipation, we've got the 20-day coming up. The 50-day is basically leveling out, which is all good. And so it blasted out of here on earnings, had this really wide and loose day all the way from 32 down to 24. And so the anticipation is that eventually it will break out of this little downtrend here and start moving higher that way. To probably test, we're going to put our first target up here in the 29 level. And if it breaks above that and goes into a nice uptrend, what's really good about this position right now is that it is bouncing off the 8-week moving average and the 20-week moving average with all of those jointly together, which they represent the 50 and the 100-day moving average. And so it's finding support, and what's very interesting, isn't it, right at the middle of that big upswing candle that it happened just before earnings. The big large candles, both bullish and bearish, the midsection of them tend to be a level of support / and or resistance. And so that's our expectations. Our stop loss is down here just below the 25 level, and now that trade is basically on automatic. One of the other people asked about was Habit. Put on an alert on Habit this morning with basically a stop limit trade to trade. What was very interesting about this trade is that although the stop limit wasn't totally hit by my order with Thinkorswim, it filled. So it's kind of like take one of those gift horses in the mouth. Filled at 32.70. I was looking to get the bounce off of the 8-day, this 8-day moving average going up here. The 8-day can now become a stop loss for me, or I can, if I want to wait for the earning run, and this is an anticipation of earning runs. If we break through the 34 level, then we have some resistance up here, just about 35.50. But the measured move is basically going to be from 30 to 34. Add $4 to that. It may visit up here in the 38 level prior to earnings, which the earnings are on the 10th. So, David, I'll come back for. Here's a potential energy trade, or to keep an eye on. This is GLOG, and this may work out to be a longer time holder. It reported today. It beat earnings by almost a dime, And this is basically the liquid nitrogen gas shipping company. It needs to break out of this congestion up here at about $21, and then we'll at least go to 22. If not, this could be the, looking like it's it's trying to bottom on a large cup formation, because if it really gets in gear, we're probably looking 28, 30, or even $32. And so that's one of my energy stocks, Dave. So do you have that other one, bud?
I do. I have data and AMBA.
Okay.
So data, like I just said, is just trading sideways, basically, as it digests its gap up, off the massive earnings report they put out. As you can see down here, really healthy volume action. Lots of good accumulation days. When it's down, including today, it's on light volume. So don't see really any problems there. And as far as AMBA goes, it's trying to build a new base here. It's got some resistance at the $60 level that it's dealing with here, and short-term overbought here, so it might pull back here and retest the 50-day.
Yep. Yeah, AMBA, it gave an opportunity early in the week to jump in on this pre-earnings run, but it was so fast and furious, it was a tough one to grab a hold of. Did you guys get into that one, Dave?
We did, unfortunately. It's one of the losses I showed earlier today.
Ah, okay. But I mean, this week, did you get into this one?
No.
Okay.
No, I'm kind of, AMBA, I feel the same way like I said about Spirit. Okay, it's kind of made a pretty big run. I still think it's got gas left in the tank, but, so if you're going to do it, do a smaller position or so.
Yeah, and and that's one of the things on the traders report. I identify typically on every traders report on the weekend somewhere between 5 to 15 stocks that are setting up to either go up, down, or sideways, and I label them that way. For stocks going up, stocks that are basically a toss-up could go either way, and then stocks that are lined up to go down. And if a trader knows the active trend trading system, you see a setup, go ahead and take it, because I sometimes miss a setup, and it's always cool to hear people come back and say, hey, guess what, I got into this, and this is what happened. But we do highlight the stocks that we're interested in at the beginning of the week. And as the market is basically starting to limber up a little bit, we'll be jumping on more trades as we go along. So let's see, Alaska Air. I really like Alaska Air. It's consolidating here. Volume's a little bit, down below average as it's doing this consolidation, driving across. But some of the positive sides of Alaska Air are 50-day moving average moving up. The 8-day starting to roll back up, and if it pops back above the 20, which is right now unfortunately pointing down, and look how well the 20-day acted as resistance for the Alaska Air. It's just digesting right here, and perhaps if we get this breakout or maybe another bounce as it's consolidating, can push Alaska Air back up into the 68 to 70 range, and that would be about a $6 to $7 gain in what could be very short order. Great stock for options. One of our member Andy there, Andy Morrison in Texas, was trading options on this. Jumped in it down here, and he was taking his profits at 30% and 50%, and so he's already taken like a 45% gain on ALK, and that was one of the test trades we did in the IRA, and yeah, it worked out really well. Another one, what was BITA? Ming, I've been keeping my eye on BITA. It's I thought it was going to do something really nice down here and bust out, but it had all this overhead resistance right here at this level, which is about 60, let's say 66ish. And it's got the 200-day moving averages trying to get through, but the 200-day moving average is still facing up. The 50-day, so it just came together. These convergence of clues came together to say, you know what, you're just not ready to break out there. Now, BTA, the issue is we have earnings coming up on BTA on next week at 3.5 BMO before the market opens. So this is one of those where, David, would you buy BTA before earnings?
Not right now, no.
Okay. And part of the reason for that is because it made a new lower low, and it has not showed it's ready. It is not ready to get going again. It tried to do one of the shakeouts, but we haven't had that +3 move. And as you can see, even on the weekly chart, it's looking more bearish than bullish. And a couple of the cousins of BTA are, look what's been happening to them. I'll just throw this up real quick. Great to the short side. And then it's, was it this one? No, it wasn't that one. I know which one it was. I've been watching these. I kind of like the concept of the companies, but oh my goodness, they keep getting hammered and hammered and hammered, and have are really coming apart at the seams. But at some point, they will bottom out and do a reversal. So, any more stocks for today, guys? Okay. Well, thanks for joining us. Dave, you got any last and final comments?
I don't think so. Just take it easy out there, because we are short-term overbought. So take it easy and let the stocks come to you, because they will.
Yep, it sure will. And Raul, we have I have a basic training on options recording on the website if you're a premium member. Okay. Yeah, Kevin, I will chat about that just real briefly. Okay, it was basically I put my order in, and as you can see from my order, it was based on habit. Let me get that up real quick, HABT. Okay, HEBT, and basically on habit, I put my order just above where because the 8-day moving average was sitting at 3250, 3256 currently, and so I estimated that if it drops all the way to the moving average, that would be okay. And then what I did is my stop limit was 3260. And 3270, and so it wouldn't have had to drop all the way to the moving average, but it could have gotten close and then rebounded, and that's the way I put the order in. And like I said, hold on just a second. Let me go over here. Here we go. I'll just show you guys the my order, that it was in place with Thinkorswim, 2060 stop, 3270 limit, and at 8:53 this morning it filled at 3270. And from what I can see, it was how and why it filled, I don't know. Because in reality it probably shouldn't have, because it wasn't totally triggered, but it did get me in. Did anybody else trade that and get? Yep, that's exactly right. It just filled it to 3270. So Okay, Dave, I'm going to wrap it up. And if anybody else did get filled, if they try and Thinkorswim, could you please let me know? Because I'm going to call Thinkorswim probably on Monday and say, hey, you know, why did this order fill the way it did? But right now I'm going to write it as designed. Okay. Are you trading with Thinkorswim, Tracy? Okay. No, with Schwab. Okay. So, okay, folks, have a great weekend, and we'll catch up with you next week. We'll get everything out. So, have a great weekend. Bye, Dave. Talk to you later, buddy.
Okay. Great. Thanks.